They tell you the world is open to anyone willing to work hard. That success is simply a matter of discipline, effort, and perseverance. Motivational speakers sell you dreams. Self-help books promise transformation. Society repeats the same mantra: if you're not successful, you're not trying hard enough. But what if I told you that behind these slogans lies a different reality? A reality where poverty isn't always an accident of economics or personal failure, but often the predictable outcome of intentional design. This isn't a conspiracy theory. This is pattern recognition. Throughout history, those who hold power have built structures, political, social, financial, not just to maintain their position, but to ensure that those below them remain dependent, predictable, and manageable. Today, we're going to examine the invisible architecture that shapes modern life. We're going to explore how the system was built, how it functions, and most importantly, how understanding it can help you navigate through it. Welcome to the architecture of poverty. Let's start with a fundamental truth: systems don't emerge randomly. They are constructed. And throughout human history, the people who build systems do so with specific outcomes in mind. Imagine a society where wealth equals power. Not just the power to buy luxuries, but the power to influence legislation, to shape cultural narratives, to determine what gets taught in schools, to decide which businesses receive funding, and to protect generational advantages. If wealth provides this kind of power, then those who possess it will naturally design systems that allow their advantages to persist across time. The easiest way to preserve power isn't through violence or dramatic oppression. Those methods create resistance and rebellion. Instead, power is preserved through something far more subtle: quiet rules, invisible incentives, and structural constraints that keep the majority perpetually chasing stability while a small minority rises without hindrance. This pattern appears across civilizations and centuries. From ancient feudal systems to modern financial markets, the structure remains surprisingly consistent. Those at the top design the frameworks: currency systems, education models, property laws, taxation policies, access to credit, employment structures, and even cultural beliefs about what success looks like. And here's the crucial part: people rarely question the structure they are born into. Let's talk about money itself, because understanding money is fundamental to understanding the system. At one point in history, wealth was tangible: gold, silver, livestock, land. You could see it, hold it, and exchange it freely. Value was concrete. But as societies evolved, something changed. Money became paper. Then it became digital. Then it became debt-based. And with each transformation, power shifted entirely to those who control its creation. Here's what most people don't understand: modern money is not something governments have, it's something they manufacture. Central banks create currency not backed by gold or any physical asset, but by trust in the system itself. And every time new currency is created, it dilutes the value of what ordinary people have already earned. This is how inflation functions, as an invisible tax that requires no vote and no consent. When a government prints money to fund projects or bail out institutions, prices rise across the economy. Your savings lose purchasing power. Your wages buy less. You work the same hours, but your life becomes more expensive. Meanwhile, those who own assets, real estate, stocks, businesses, watch their wealth multiply. Why? Because asset prices rise with inflation, while wages lag behind. The system creates the illusion of economic growth while quietly transferring value upward. Think about what this means in practical terms. A house that cost $50,000 in 1970 now costs $500,000. Did the house improve 10 times over? No. The currency was diluted. But someone who owned that house in 1970 became wealthier without working. Someone trying to buy that house today must work exponentially harder for the same asset. This isn't accidental. This is structural wealth transfer, operating continuously, invisibly, and legally. The system doesn't require people to be poor in absolute terms. It simply requires them to be engaged in endless pursuit. The pursuit of bills. The pursuit of loans. The pursuit of mortgages, rents, insurance premiums, taxes, and interest payments. A society built on debt is a society built on dependency. Why? Because people who owe money must continue working, regardless of how unfair their conditions become. Debt removes negotiating power. It eliminates the option to walk away. It creates compliance through obligation. And debt is not an accident, it is engineered through multiple mechanisms. First, consider credit scores. This system determines who can borrow, how much they can borrow, and at what cost. On the surface, it seems neutral, a mathematical assessment of risk. But look deeper. Credit scores punish those who don't participate in the debt system. If you never borrow, your score suffers. The system rewards debt usage, not debt avoidance. Second, examine interest rates. Those who have money borrow cheaply. Those who don't borrow expensively. A wealthy person with assets can secure a loan at 3% interest. A poor person without collateral pays 15, 20, even 30% through credit cards and payday loans. The poor literally pay more to access the same money. This creates a mathematical trap. Imagine two people, one borrows $10,000 at 3%, the other borrows the same amount at 20%. Over time, the first person pays $300 in interest. The second pays $2,000. For the same money. The system charges poverty premiums at every level. Then there are mortgages, perhaps the most powerful debt instrument ever created. A 30-year mortgage keeps someone obligated for 3 decades. It ties them to a location, to a job market, to a specific economic reality. Banks earn double or triple the home's value through interest payments. And during those 30 years, the borrower cannot easily take risks, cannot easily start a business, cannot easily challenge their employer. They are structurally invested in maintaining the system that approved their loan. Student loans operate similarly. Young people are encouraged to borrow for education, often before they understand the weight of that decision. They enter adulthood already obligated, already behind, already working to pay for something that should have made them free. Education becomes another form of indentured servitude. The brilliance of the debt system is that it feels voluntary. Nobody forces you to take a loan. But when housing costs rise faster than wages, when education requires tens of thousands of dollars, when medical emergencies can bankrupt families overnight, choice becomes illusion. You are choosing between debt and deprivation. Now let's examine how the system begins shaping people from childhood. Ask yourself, what do schools actually teach? Children learn mathematics, history, literature, science. They learn to follow schedules, memorize facts, obey authority, and pursue stable employment. These are useful skills. But notice what they don't learn. Children are not taught how the financial system works. Not how debt compounds. Not how taxes operate. Not how wealth is actually built. Not how the wealthy structure their assets. Not how corporations minimize taxation. Not how money is created. Not how to read a balance sheet or understand equity versus income. This absence is not accidental. The education system was designed during the Industrial Revolution to prepare factory workers, people who would show up on time, follow instructions, perform repetitive tasks, and accept hierarchy. That model persists today, despite living in a completely different economy. The system prepares children not for independence, but for participation in an economy designed by others. They are trained to be workers, not owners. Employees, not creators. They graduate seeking jobs rather than building enterprises. They look for security rather than opportunity. They trade time for money rather than building systems that generate value. Meanwhile, the wealthiest families do not rely on the public education system to teach their children about wealth. They provide private tutoring, mentorship from successful individuals, access to real networks, and practical knowledge about leverage, ownership, and capital. By the time these children reach adulthood, they already understand mechanisms that ordinary people spend decades trying to figure out, if they ever do. This educational divide ensures that each generation largely reproduces the economic position of the previous one. Social mobility exists, but it is exceptional rather than normal. The system allows just enough upward movement to maintain the illusion of meritocracy, while structural advantages compound across generations. Let's talk about work culture, because the psychological manipulation here is profound. People are taught to associate their identity with their job title, to feel guilty for resting, to view business as productivity, to equate long hours with dedication. This programming keeps people from noticing a fundamental pattern. The harder they work, the more the system benefits, while their own life moves in incremental steps. Consider the typical career progression. You start entry-level, work hard, receive a small raise. A few years pass, you get promoted, receive another raise. You feel progress. You feel rewarded. But examine what you've actually gained. You now make more money, but your expenses have increased too. Your lifestyle inflates with your income. You move to a better apartment. You buy a better car. You upgrade your possessions. The raise disappears into consumption, and you're still living paycheck to paycheck, just at a higher number. More importantly, you still don't own anything. You have a salary, not equity. You have a title, not ownership. You have benefits, not assets. The company you work for generates value, and you receive a predetermined wage regardless of how much value you create. The surplus, the difference between what you produce and what you're paid, flows upward to shareholders and executives. This is the core mechanism of the system. Workers create value. Owners capture value. The system rewards loyalty, not liberation. It gives you promotions instead of ownership, raises instead of equity, applause instead of freedom. And by the time many people realize this pattern, they have spent decades inside a structure designed to keep them occupied but not empowered. They have mortgages, children, obligations. Walking away becomes increasingly difficult. The system has successfully converted their time, the only resource they can never recover, into the perpetuation of structures that benefit others. Humans are wired for comparison. We measure our success relative to others. The system exploits this tendency fully. Through advertising, media, and cultural programming, people are taught that consumption equals status. That your worth is demonstrated through your possessions. That you need the latest phone, the newest car, the trending clothes, the impressive vacation. Not because these things improve your life significantly, but because they signal your position in the social hierarchy. This creates a devastating trap. People spend money they don't have to appear successful. They take loans for weddings, for houses, for celebrations, for lifestyles. They work more to repay these loans, and the cycle continues. When consumption becomes identity, people no longer ask why they are buying. They simply obey the rhythm of the marketplace. Credit cards facilitate this perfectly. Buy now, pay later. The purchase feels costless in the moment. The bill arrives weeks later, carrying interest that compounds monthly. What seemed affordable becomes expensive. A dinner, a purchase, a trip, each one reasonable in isolation, but collectively creating a burden that takes years to escape. Social media accelerates this mechanism. Everyone presents their best life: vacations, purchases, achievements, celebrations. You see highlights, not reality. But your brain compares your entire life to everyone else's curated moments. You feel behind. You feel inadequate. You spend to keep up with an illusion. The system understands that keeping people in competition with each other serves multiple purposes. First, consumption drives economic activity, generating profits for corporations. Second, people focused on personal status don't organize collectively to challenge structural inequalities. Third, the constant pressure to maintain appearances ensures continued participation in debt-based consumption. This is why financial literacy is rarely taught but consumption is constantly encouraged. The system benefits when people spend rather than save, when they compare rather than collaborate, when they chase trends rather than build wealth. Let's examine housing, one of the most powerful mechanisms of wealth extraction in modern society. In many historical societies, land was accessible. Communities held common land. People could build shelter without purchasing permission. Over time, land became owned, regulated, taxed, and monetized. Today, the basic human need for shelter has become one of the greatest sources of lifelong financial pressure. Consider the mathematics. Housing prices in most developed economies have risen 2 to 3 times faster than wages over the past 50 years. A house that once cost 3 times the average annual salary now costs 8 to 10 times that salary. This isn't supply and demand alone, it's financialization. When housing becomes an investment vehicle rather than a basic need, prices rise beyond wages. Investors buy properties to generate rental income or capital appreciation. Homeowners view their house as their primary asset. Real estate investment trusts pool money to acquire housing. Each of these actors bids up prices, making housing less affordable for those who simply need shelter. The result? Rent extracts wealth from those who cannot afford to own. A person paying rent transfers money monthly to a landlord, building equity for someone else while building nothing for themselves. Over decades, this represents hundreds of thousands of dollars moving from the poor to the wealthy. Mortgages, while allowing ownership, create decades of obligation. That 30-year commitment keeps people compliant. How can you challenge your employer when losing your job means losing your home? How can you take entrepreneurial risks when your family's shelter depends on consistent income? How can you relocate for better opportunities when selling involves closing costs, real estate fees, and capital gains taxes? The system ensures that the basic need for shelter becomes a mechanism of control. And those who own multiple properties benefit continuously from those who own none. The tax system reveals the architecture of inequality with mathematical precision. Ordinary workers face direct income taxation. Money is deducted from their paycheck before they even receive it. Then they pay sales tax on purchases, property tax on homes, capital gains tax on any investment profits, penalties for early withdrawal from retirement accounts, taxes on taxes. Meanwhile, the wealthy operate through corporate structures, trusts, and asset-based wealth that is taxed differently, or not taxed at all. They can borrow against assets without triggering taxable events. They can offset gains with losses. They can deduct business expenses. They can relocate assets to favorable jurisdictions. They can time sales to minimize tax burden. The wealthiest individuals often pay a lower percentage of their income than middle-class workers. This isn't tax evasion, it's tax optimization through legal mechanisms designed into the system. These mechanisms exist because legislation is shaped by those with resources to influence it. Consider how politics operates. Political campaigns require funding. That funding comes from wealthy donors, corporations, and interest groups. Politicians who serve these interests receive continued support. Politicians who challenge these interests struggle to compete. The system selects for representatives who will maintain structures that benefit their sponsors. This isn't corruption in the traditional sense, it's structural bias. The system was built this way. Citizens vote, but choices are pre-filtered through a mechanism that ensures candidates, regardless of party, operate within boundaries acceptable to those who fund the system. The result? Legislation consistently favors capital over labor, assets over wages, ownership over work. Tax reforms that claim to help everyone disproportionately benefit the wealthy. Regulations that claim to protect consumers often protect established businesses. Programs that claim to address inequality often subsidize the system rather than transform it. One of the most subtle tools keeping the system intact is distraction. People are kept perpetually busy with entertainment, cultural conflicts, political drama, and constant stimulation. News cycles create artificial urgency about topics that don't affect daily life while ignoring structural issues that do. Social media algorithms feed outrage, triggering emotional reactions that prevent analytical thinking. Entertainment industries produce endless content that occupies attention without encouraging reflection. When the mind is saturated with noise, seeing patterns becomes nearly impossible. The system also relies on division. Race, religion, politics, generation, any category that separates people into opposing groups serves the same function. When ordinary people see each other as enemies, they cannot unite to challenge the structures above them. Competition between the poor is the most efficient way for the rich to stay safe. Technology introduces a new dimension of control. Surveillance capitalism tracks behavior, predicts choices, and shapes decisions. Algorithms determine what you see, what you buy, what you believe. Recommendation systems influence taste. Social platforms influence identity. Digital systems influence opportunity. The system no longer needs to force compliance, it predicts and nudges behavior before you recognize what's happening. Every search you make, every purchase you complete, every post you like trains systems to understand you better than you understand yourself. This data is used to sell products, influence elections, and maintain the structures that benefit those who control these platforms. But here's the crucial truth. For every system that restricts, there are cracks. And through those cracks, awareness grows. People are beginning to question why they work more but own less. Why their parents could buy homes easily while they struggle for stability. Why wages stagnate while costs rise. Why debt feels permanent. Why the wealthiest individuals seem to operate outside the rules that constrain everyone else. Awareness is the first rebellion. Understanding is the first escape. Escaping the system doesn't begin with money, it begins with knowledge. With recognizing patterns. With questioning narratives. With challenging assumptions. With understanding that poverty is not always the result of personal failure, but often the result of structural design. Once you see the system, you can choose which parts to participate in and which parts to reject. You can learn the mechanisms the wealthy quietly teach their children: ownership over employment, leverage over labor, compounding over consumption, networks over credentials, equity over salary. You can step out of the mindset of scarcity into one of creation. You can stop competing with people who aren't your enemy and start focusing on the structures that shape your life. You can build assets instead of just earning income. You can prioritize freedom over status. You can question every financial decision through the lens of who benefits from your choice. The system was built to keep you poor, not just in money, but in time, energy, and autonomy. But seeing the architecture gives you the ability to walk through it instead of being trapped inside it. Every person who understands the design becomes one less person who can be controlled by it. And that is where change begins, not with the collapse of institutions, but with the awakening of individuals who refuse to remain silent participants in a game they didn't choose. The world may not be fair, but it is understandable. And once you understand it, you can begin to reshape your place within it, no matter how deeply the system was designed to keep you where you are. The question is, now that you see it, what will you do?